Dear valued clients and partners, warm greetings from the Dara Group Management Team. We are pleased to give any guideline and offer procedure of our international loan cooperation. Set out below an overview of financial asset management offerings from the lender that we are working with the latest required documentation and an explanation of the process. There is a lot of information, and after you have a chance to review it, we would be happy to answer any additional questions you may have. 1. About the lender. The lender is part of a wider group of companies that operate in their trading activities and have participated in previous project funding structures. The main entities involved in the current project finance proposition are in the US and Portugal. They are also in the process of setting up some regional entities to accommodate and maintain the efficiency of processing of transactions. They offer a very unique and bespoke market disruptive suite of financing facilities as follows. Classic commercial facility, this applies in your case. Crisis financing facility. Philanthropic funding facility. Social responsibility foundations. Key facts and figures. In operation since 2012. Over 80 projects financed to date. More than $30 billion financed. They provide up to 100% financing. Generally, they look at projects in excess of $50 million. However, we have a facility with them for smaller projects starting from $10 million or equivalent. Drawdown protocols are in place for both small cap and large cap transactions. On small cap, up to 8.33% of the total funding line can be drawn every 30 banking days. On large cap, the drawdown can be up to 20% of the total funding every 30 banking days. A pipeline of projects can be aggregated to allow for higher drawdowns as long as proof of funds for the collateral of 20% of the total amount of funding can be provided. The whole structure could then be rolled out in phases. They do not seek equity or security over the assets. The classic facility requires circa 20%, 25% for projects under $50 million in the form of security. We recommend the pledge structure, as it has an additional layer of security for the client and is quicker. Interest rates are based on 12-month USD SOFR, secured overnight financing rate, plus between typically 200 and 400 basis points depending on the project, location and risk profile. No upfront fees. They charge a 3% fee on amount drawdown. This covers everything. On the funding side, no other fees charged. Introducer fee is 2%, can be paid from drawdown on submission of a signed agreement by both parties. Flexible grace periods, typically up to 3 years. Our lender is an independent company based in the USA and participates within a group of 7 investment companies located in the USA, Portugal, Madrid, Dublin, London, Turkey, Zurich, with global outreach in project financing. Our lender generates its own funds from the purchase and sale of fixed income assets and securities. The lender buys and sells fixed income assets and securities through brokerage accounts, sub-accounts in Numis and Oanda, in international investment banks such as HSBC, Barclays, and Credit Suisse. At the same time, their fixed income assets and securities clients mainly consist of pension funds from the USA and Australia. These entities are highly regulated via their governments and national authorities. As a result, they have the complete conviction and certainty that their profits are constituted by clear, traceable funds. To complete and diversify the portfolio, our lender also decided to finance private and government sector projects, crossing continents, and in all commercial sectors that are important to society, such as infrastructure, energy, natural resources and technology, resulting in the economic development of several countries. They have developed a unique risk modulation model that allows them to provide financing with terms that are not available in the regular financial markets. The proposition is structured in such a way that the lender will benefit from additional banking benefits from the banks acting as beneficiary for the collateral on their behalf. This allows them to provide very attractive interest rates without adding any risk to the collateral, which is held purely as a guarantee against default by the borrowers. 2. Financing facilities. There is additional documentation and presentations which explains in more detail the information about the lender along with a basic description of the financing facilities. There is also a process and Q&A document which can be shared with you at the appropriate time once we have qualified the project. 3. Submission documentation requirements and process. All the templates of the submission documents are provided to us along with the client's business plan, and once we review the information, we send it on to our lender. Summary of process and structure. All new client submissions are considered under the same interest rate range in line with the lender's classic financing facility at 12-month USD SOFR at 200 to 400 BPS per annum. Effectively, their interest rates can range between 2% and 4% depending on the project and structure type, sector, jurisdiction, strength of business plan, declaration of crisis, or not an ability of the client to issue a collateral guarantee. Phase 1. 1. Submission of Document 01 LOI. 2. Submission of Document 03 Business Plan in client's own format. 3. Submission of Document 04 Project Summary in template format. 4. Submission of Document 06 Statement of Guarantee. 5. Submission of Document 07 Proof of Funds, POF, which can be a bank statement, bank comfort letter, or a solvency certificate. 6. Submission of Document 08 Statement of Confidentiality. After sending these documents to the lender, it will take an average of 5 working days to answer if the project and the company is in a position to take out the financing. It is a pre-approval, and an email will be sent informing of the provisional approval. It will include a term sheet and the documentation required for the next phase. Please note this pre-approval is valid for 1 month, during which time the client will be expected to have moved forward with the process, following the steps and timings listed below. If the client does not have the cash available, but can clearly identify POF from a third-party provider or investor, or has evidence of the ability to monetize assets accordingly, we may be able to get the lender to accept this at the first phase. We have multiple clients who have agreed a commercial deal with an investor or shareholder to provide the collateral funds with a view to repaying them from drawdown or to remain in the business as an equity participation. The lender would need to see a copy of the agreement or letter of offer between the two parties, plus proof of funds from the third party. Phase 2. The client, a company or government, when they receive the email with the pre-approval information, must, within a maximum period of 10 working days, submit the documents below. 1. Send Document 09 CIS. 2. Send Document 10 letter to the financier. 3. Send Document 11 minutes of special meeting. 4. Send Document 12 informed consent personal data. 5. Send Document 13 proof of funds and confirmation letter. 6. Send Document 14 solvency certificate. 7. Send Document 15 ATV, authorization to verify. Phase 3. After receiving the Phase 2 documents, the lender will have 7 working days to check all the documentation and finalize the modus operandi of the disbursements to the client in order to finally issue the financing agreement, as defined between the parties. This agreement is not a loan agreement. Phase 4. Client due diligence. When a client receives the financing agreement and is comfortable with the structure, a call can be arranged to enable both parties to get to know each other and ask questions. The lender will then present to the client, by email, a pack with all the key company documents for their own due diligence. Additionally, some previous client references of completed transactions can be provided at this stage if required. Phase 5. Starting and execution of the project. 1. The financing agreement will be signed. 2. The pledge structure is executed. This is straightforward, cost-effective, and has an additional layer of security for the client. 3. First disbursement by lender. 4. Following financing disbursements by lender. In addition to the above documentation mentioned, I can provide a 2-pager on the description of the securities pledge account structure. This could also be set up with the borrower's own securities account at their own bank. If they can accommodate this, you would need to ask them the following. 1. Will they open you a securities account with a portfolio made up of 70% treasuries and 30% ETFs? A specific blend and suggested funds can be provided. 2. What level of margin account will they provide based on that type of portfolio? 3. Will they allow you to instruct them to transfer 65% of the value of the main account from the margin account to a third party externally? If not, then you will receive the margin facility into your own account and then remit it to lender, as many brokerages don't allow third-party transfers. 4. In the event your own bank holding the securities account cannot accommodate this facility, then the lender can introduce you to one of their bankers to initiate this process. A recent client of mine was introduced to BNY Mellon in New York by the lender, so will be an institution of similar rating. Hopefully, this provides you with a good understanding of the proposition. As this business continues to grow and evolve, The lender will periodically review the systems and processes to ensure that they remain at the cutting edge of this business, serving and meeting all the needs of the introducers and clients. Please let us know if you have any questions or wish to discuss any of these points or the attached documentation. Thanks for your best cooperation with us in the future. Best regards. Lion Dara Group Management Team. Email liondara.7@gmail.com. www.liondara.com. www.liondaragroup.com. The Asia Pacific region. Thanks.